You open your brokerage app and see a tiny card for a new stock you've never heard of. No famous product, no familiar logo, just a ticker and a date. That's where this ECST IPO starts. Not with hype, but with a simple question. Is this a real business already, or a bet on what it might become? The company is ECST Holdings Ltd, and its stock market nickname, or ticker, is ECST. It's expected to trade on the Nasdaq, which is the same exchange where many technology and growth companies list. On the cursor stocks, this is exactly the kind of IPO worth slowing down for, because the headline is clearer than the story underneath. You probably don't use ECST directly. Almost nobody watching this has a daily ECST moment the way they might with a phone app, a delivery service, or a coffee chain. That matters, because when the everyday anchor is missing, investors have to work harder. The job is to find who pays the company, why they pay, and whether that demand can grow. Here's the actual IPO setup. An IPO is the moment a private company starts selling pieces of itself on the stock market. ECST is set for June 22, 2026, with 5 million shares offered. Shares are tiny ownership pieces of a company, and this deal is aiming to raise about $30 million. The price range is listed at $5 to $6 per share, but the raise math points to the top of that range. If the company raises $30 million by selling 5 million shares, that works out to an expected price around $6 a share. Because the offer is still pending, treat that as expected, not final. Why does a company go public at all? Usually, it wants money to grow, more visibility, and sometimes a path for early backers to eventually sell. For a new investor, the important part is this. Buying the IPO story means believing the money raised today can turn into a stronger business tomorrow. About $30 million is small compared with splashy billion-dollar IPOs, but it's still real money. Picture that brokerage app card again. One little listing is asking public investors for enough cash to fund hiring, expansion, product work, debt cleanup, or some mix of all of that. The problem is that the exact operating plan isn't fully visible yet. One big number is missing: the valuation, meaning the price tag investors are putting on the whole business. Market cap is what the whole company is worth on the stock market, but ECST's IPO value hasn't been set yet. So this is not a case where we can compare a firm price tag against revenue and profit. The people behind a young public company matter a lot. A strong founder story, a clear CEO, or a known headquarters can help investors understand who is steering the ship. For ECST, those details are not pinned down in the public profile available to ordinary investors yet. That doesn't prove anything bad, but it removes one source of confidence. The same issue shows up with the business itself. A good IPO story should answer 3 quick questions. What does the company sell? Who buys it? And why would they keep buying more? With ECST, the listing terms are visible, but the operating story is still thin. That makes the central question sharper, not softer. The bull case starts with size and optionality. A $30 million IPO is not asking public markets to swallow a giant deal on day one. If ECST has a real product, real customers, and a path to scale, a smaller listing can give the company room to prove itself. That's the hopeful version of this story. The price range also tells you this is meant to be an accessible-looking stock. A $5 to $6 share price feels small on the app screen. But remember, the share price alone doesn't tell you whether something is cheap. Cheap or expensive depends on the whole company's value, the business quality, and how much money it can eventually keep. Now the catch. Pending IPOs can change before they trade, and small new listings can swing hard once regular investors can buy and sell them. That little card in your brokerage app can feel simple, but the first few trading days may be noisy. Price movement is not the same thing as business progress. The financial reality is the part we normally want most: revenue and profit. Revenue is the money coming in before expenses. Profit is what's left after the bills are paid. For ECST, The latest full-year revenue and net income are not available here. Without those, investors can't yet see whether this is growing, shrinking, profitable, or burning cash. This is where a new investor can learn something useful. You don't need to pretend every IPO is understandable right away. If the business model, customers, and financials aren't clear, the smart move is to wait for clearer filings or post-listing updates. Curiosity is good. Guessing is not a strategy. Competition is also hard to judge until you know the customer. Every company competes for someone's budget, whether that's a consumer, a factory, a hospital, a retailer, or another business. For ECST, the public story doesn't yet give a clean rival map. So the right question is not who has the prettier ticker, but who else wants the same customer's money. The valuation tension is simple. The deal has a visible raise, but not a visible whole company price tag. That means investors can't yet say, this company trades at this many times sales, because the sales number and valuation are both not pinned down. The headline number looks manageable. The question is, what's underneath it? Another useful question is who gets the IPO money. Sometimes new shares fund the company itself. Sometimes insiders also sell shares. A lockup is a waiting period when early insiders usually can't sell yet. For ECST, those details aren't clear from the basic deal terms, so watch for the prospectus language before assuming where the cash goes. After it lists, watch 3 things. First, the final IPO price. Did it land at $6 below that or above the range? Second, look for a clearer description of what ECST sells and who pays. Third, watch for revenue, profit, and cash burn, because those numbers turn a story into something investors can actually test. So the balanced view is this. ECST could become an interesting small IPO if the company shows a real business, real customers, and a sensible use for that $30 million. The doubt is just as clear. Right now, too much of the operating story is still missing. What would have to be true for this IPO to make sense? More proof. Go back to that brokerage app card. Now you know how to read it. Ticker, exchange, date, share count, price range, money raised, valuation, business model, and risks. That's the goal of the cursor stocks. Make the next IPO feel less confusing before it trades. This video is for information and education only, not financial advice.